You are live. What's up, everybody? Just make sure this works on Facebook.
Live, baby.
Make sure it's working. Great. We're live. Awesome. All right, everybody. Welcome to another live stream. As always, I'm your host, John Sintich. I'm your go-to realtor for all things real estate in the South Suburbs and the Chicagoland area. And I have my favorite guest, my partner in crime, Jimmy Webber of LeaderOne Mortgage, the go-to for all things mortgages. What's going on, dude?
Not much, man. Thanks for having me as always. Yeah, LeaderOne, new digs. Previously with Celebrity Home Loans, Midwest Equity Mortgage. So a nice transition and ready to, just absolutely knock it out of the park, man.
Yeah. Really nothing. For me, it's nothing new. It's just the same thing you always do, crush mortgages and
that's right.
Get into houses.
Yeah, the only difference is my email, right? It's the absolute same thing for you and anyone that uses our services. Same amount of, touch from our team and of course from me too.
Yeah. Well, score for LeaderOne. They got a great mortgage team.
Let's go.
Yeah. Well, today, obviously, Jimmy, we talked about it before we hopped on, but I want to touch base with everyone that might tune into this or watch it after it's recorded. Just going over kind of the craziness in the market, what we're seeing on the news media headlines. It's kind of like a tale of two markets, and it kind of seems like a roller coaster. If you follow my social media, you're seeing rates. You see me talk about rates going up and going down. Hence why we did the beautiful thumbnail for today's stream. We've got the roller coaster, me and you on for the ride.
Crazy ride, man.
Yeah, a couple of young professionals on a roller coaster. It looks like tons of fun.
Front row.
It's not it's not as fun when it's a roller coaster of the economy and economics. It can be kind of scary and nerve-wracking, especially when you're looking to maybe do a home purchase or a home sale. It's going to be the biggest asset you likely purchase or sell in your life. So what's going on with the market? You see on the news a lot of stuff. You see prices are going down. Is it a real estate crash? So me and Jimmy just want to go over, some of the actual data that has occurred, especially over the last month. It's been quite an interesting market here in the Midwest. What do you want to start with? Just kind of what happened in Cook County and what happened in Will County, which is, a lot of the areas we serve, and then go from there.
Let's do it. Yeah.
Cool. We'll just go through Cook County first. Cook County, obviously, it's a massive county. It doesn't take into account all of the Chicagoland area, but so like Cook County is actually over like around 5 million people versus the Chicagoland area is about 9 million people, just to put that in perspective. But real quick here, you can see up top, I'll just I can't remember if the mouse was showing up last time. That was the one thing I didn't.
It wasn't, but there was a laser pointer somewhere.
Really? Okay. So it was working. Or you figured out the laser pointer. Didn't you?
I did.
Oh, no. Now I can't figure it out. Of course, this was the one thing I didn't do before, was figure out the laser pointer. Sorry, bear with us, everyone. Let's see. If I can't find it, we'll just... brand, no. Whatever. I'll just pull it up and people can find what I'm talking about. I'll make it a little bit bigger.
There you go.
Oops. Okay. So Cook County, we had from January to February, we saw almost 30% reduction in new listings. So in order for prices to go down right now of homes, we need a ton of listings to come to the market. Right now, there's about anywhere from 450 to 480 active listings that are not currently under contract, 480,000 in the entire country, just to put that in perspective. A normal market, you need about 2 million homes for sale that are available to purchase for a balanced market. So just to put that in perspective, we're very low on inventory still, and that is absolutely the case in Cook County. You can also see a 33% decrease in closed sales and a negative 12% change in inventory of all homes. Okay. So that's not new listings. It's all homes. So we're seeing just inventory in general go down. But let's look here. Median sales price, if you go down for detached single family homes, median sales price from January to February, it went down by 0.5%. If you look even further to the right, you're going to see median sales price increase over the last 12 months, 1.6%. Okay. So over the last 12 months, we've still seen year over year appreciation in the Midwest. And we'll pull up some more information later in this live stream to kind of back that up and show that trend as well a little bit more clearly.
And that's without a non-seasonal adjustment, John, right?
Correct. Yeah. This is just straight raw data.
Okay.
Yeah. So this is Cook County, right? We're seeing still a decrease in inventory. We're seeing year over year appreciation. Now we are seeing a little bit of month over month depreciation in all of Cook County. The thing I want to kind of emphasize here is the hyper local nature of real estate. What's happening in different parts of the country is not happening in the Midwest and Chicagoland area specifically. And even in Cook County is big. There's different pockets of Cook County that are appreciating right now from January to February. So just keep that in mind. And we can run through Will County real quick here as well. And then we'll kind of get this. This is kind of a lot. This is kind of dense. Like there's a lot of information on here and I can't freaking find the laser pointer. So people are
Dude, that's on me. I had it last time. I can't find it for the life of me either.
Yeah, well, a couple of millennials can't figure out technology. So Will County, you see a little bit less decline of new listing inventory, still down month over month, negative 8% up top here, negative 8.8% change in new listings, 9.5% decrease in closed sales. But we did have a 6.7% increase in all inventory. So not just new listings, but also listings that have been on the market for longer than like a week. Median sales price in February went up 2.6%, and it's up 7.2% year over year. That's median sales price. The other thing that I wanted to note here is pending sales, where it says under contract. That went down 10%, 11.7% from January to February. We also saw a 21.1% decrease year over year. So that number is actually coming down or going up, depending on how you want to look at it. Last month, I think we saw at least a 30% decrease year over year of pending sales. And when interest rates came below 6.5 in January, we saw a huge influx, at least I did in my market, of activity. Like all my listings were selling quickly if they were priced right, which they always are, but we saw a flurry of activity when rates came below 6.5. So you can see Will County had still the activity is not anywhere near where it was when rates were at 3%. I mean, let's state the obvious, but pending sales are going up on a year over year margin. Because like last time it was at least 30% decrease. So I share all that to talk about just that in the context of the national headlines that are going on. You're hearing like, in some markets, home prices are dramatically decreasing. So I just kind of want to get your take on where things are right now based on just some of the information I just shared, Jimmy.
Well, how many people are you showing homes to right now that are getting into multi-bid, right? The same people that maybe a couple of months ago we told them to get going. And unfortunately, a lot of people, including us and the Fed and borrowers, do live looking in that rearview mirror. The coulda, shoulda, woulda, right?
Yep.
So if you're going into a bidding war right now with 5 other people, that home may have been available to you and maybe one other person in a bidding war just a couple of months ago. Now, of course, that is seasonal adjustment. We're entering the very busy spring market, but it's also people starting to get off that fence because they're seeing the writing on the wall and they're seeing what's happening with not only the economy, but those numbers that you just showed. Yeah.
Are you seeing an increase in mortgage applications relative to where we were just a few months ago on your end?
Absolutely. Yeah. Yep. Now, I mean, you see all the numbers with refi apps, up. There's no one refinancing right now, unless you were living under a rock. You couldn't qualify, or you have an insurmountable amount of student loan debt, or consumer debt, or hell, stretching it even further, paying off a construction loan or something. No one's refinancing from their 3% to their 6% to take out a little bit of cash.
Yeah.
So those numbers are absolutely down. But the amount of people that are now looking to be pre-approved has reached, for us, especially through our transition, a level that we haven't seen this much busyness in about 6 to 8 months.
Oh, wow. Okay. So yeah,
Yep.
definitely a large increase. I mean, would you just attribute that to one, rates coming down a little bit, and also just the fact that people are maybe starting to understand 3% interest rates are probably never coming back?
Well, it's all relative, right? It's a psychological thing.
Yeah.
So, and we talked about this last time, man. When 5.99 came on that Friday, everyone had their hands in their air and they were extremely happy. That became 6.5 again just that next week.
Yeah.
Now that 5.99 psychologically is such a very good interest rate. It's
Yep.
no longer the 3% or even the 4%.
Yeah.
We had people, I have people in my pipeline locked right now on condos in the 7s, because
Wow.
condo rates, of course, are a little bit higher. Now, to make that more affordable, we have our 2-1 buy downs and other sorts of workarounds to fix that affordability.
Mm-hmm.
But the person at 7.25 looks at 5% and sees that as magnificent, right? They're no longer comparing that to the 3%, like so many people were even 6 months ago, waiting for rates to come back down. Now, we still haven't stabilized quite yet, which we'd love to see.
Mm-hmm.
But at the same time, we can ride this roller coaster, the ups and downs, like we have been. But if we can confidently tell people that we do think that interest rates will be lower in the summer, Q3, Q4, why not buy now and refinance later? Because if rates do drop, like we've said so many times, the bidding wars that you see right now will become double digits, right?
Yeah.
All of a sudden, you're up against 10, 12 people. That home is being bid up on, and you're losing, unfortunately.
Yep, definitely. And I'm going to share something here that might put that into even more perspective. I got this from our big real estate conference family reunion last month. This is just a graph that shows mortgage rates over time from 1972 all the way through 2022. And you can see the green line in the middle is from 1990 to where we are now. The average rate is 5.97. Okay.
Right.
So, and over time from the 70s, it's 7.8. That's the average rate and I mean, you can see here in the 80s, things got crazy with rates, 16.63%. So those are, bringing up some of these averages, but I think a more fair average is from like the early 90s to where we are now, 5.97. That's the average rate. So it's just hard to swallow seeing from 2012 with all the quantitative easing going through 2022, a 3.8% average rate. And people are hoping that's coming back. And for all the things you just discussed, a minute ago, people are starting to come around to that understanding that that's probably not coming back. So, and we saw that, in the reflected in the market data that I kind of showed initially with Cook and Will County. Pending sales are increasing, or they're coming up from the lows of like the 30 to 40% decrease year over year. Let's look at pending sales in February. This is from the National Association of Realtors. So let's focus on the fact that real estate is hyper local. It's a local market, right? So we have the entire United States. The index is 100. So like 100 means that it's a healthy market. There's a lot of activity going on. That's your index. So anything above 100 is more of a hot market with a lot more activity. Anything under 100 is, a little bit slower of a market. So you can see 2022, the United States was 105.5. And you can see like in the South, things were just completely on fire, 126.8. And you can see where we are now. The dark blue bars is where we're at here in February of 2023. So take a look here in the West. The West is seeing the most depreciation and deceleration of their market, the biggest cool downs, right? It went from 90.2 in 2022 to 64.6 in this last month of February. Now, you look here in the Midwest, we were at 101.7 and now we're at 84.9. We're doing a little bit better than the Northeast, the West, and the US in general. The market that's still performing the hottest is going to be the South with a 99.3 pending sales index. So people are still they're buying a lot of real estate in the South. They're slowing down dramatically in the West and the Northeast. And then the Midwest is a little bit more stable. We've talked about that previously as well. You don't see as high of highs and as low of lows in the Midwest in general. Right. And we're kind of seeing that data here. Is any of that surprising to you as someone who does a lot of business out in California?
No, not so much. I had a client yesterday tell me that, it's a very high-end client, but their home is depreciated by $1 million in value. Now, wow. That depreciation's from, 5 million to 4 million, and they have a $600K mortgage on their home. It doesn't impact them like it would for someone else saying, just another grabber headline, my home depreciated $1 million in value.
Right.
They know that that's a fluffed up market. And he's saying that and laughing to me, right? So no, that doesn't surprise me. What does surprise me is that the South is so hot. I'm looking at that, and is it all just the snowbirds still moving down to Florida or what? Because, some of those markets are still a little bit fluffed up, but they're obviously not slowing down.
Yeah. Well, one of the things too that I overheard recently from some of the industry experts that I listen to, on a daily basis is in the Northeast, especially, and some, in our areas of Chicago, the Midwest, property taxes, there's reassessments coming along in the Northeast, and people see their property taxes go way up, and they say, you know what, to hell with this. I'm selling. I'm moving to an area with lower property taxes. Historically, a lot of states in the South have lower property taxes. So there's more people trying to buy in those areas. That's just one little example. I'm sure it's not driving the entire.
No, but it certainly makes sense. We're still looking at such a large affordability issue. So, the 30-year fixed mortgage, for example, it's an inflation buster. That payment doesn't change, that portion of it at least. Yep. But if your taxes continue to go up over time, that does unfortunately drive people out of their homes.
Yeah, definitely. Yeah, I'm curious as to other people's thoughts on why so many people are buying in the South. If you have any thoughts on the matter, drop a comment and let us know what you think. The other thing I wanted to bring up here is something that that came out of the Wall Street Journal recently. It was a report about while home prices are falling dramatically here in the West, we're seeing some really, areas that are still appreciating quite a bit, like Miami, Orlando, Buffalo. You can see here, 12% in Miami, 9.3% in Orlando, 8.3% in Buffalo. And then in our area here in Chicago, we're still seeing appreciation as well. So again, it's a very hyper local market. And that's the kind of the theme that I want to drive home of this live stream is what's happening in Seattle, what's happening in San Francisco, what's happening in San Jose, you can see here, is not happening here in Chicago, in the Chicagoland area.
Those are the same markets that appreciated by 25%, right? Sorry. So they're absolutely still in the green, but they feel like they're losing. Again, something that's extremely relative to their overall financial picture.
Yeah. And you think about this too, you're in San Francisco right now, and you bought a house in 2018, 2019. Your home's value appreciated 40% over 2021 to 2022. I'm sorry, 2020 to 2022. Okay. So if you're down 10.3%, you're still in the green 30% from the time you purchased a home.
Exactly. People feel like they lost because they didn't sell, but it's their home, right? You don't just sell because your value goes up. People move for different reasons, right? Life events specifically.
Yep. I'm going to say this again, just to drive this home, because a lot of people were listening to people saying, hey, in 2021, right, this market's going to crash. It's a bubble. Wait until interest rates or wait until prices crash and then buy. If you listen to that, you're sitting here now and you're kicking yourself because look at this, like 10.3% in San Francisco. That seems very dramatic. But if you bought in 2020 or 2019 and you appreciated 40%, you're up 30% from the time you bought with this 10.3% depreciation.
Mm-hmm.
I'll take 30% over 2 years any day of the week and twice on Sunday. It's far better than you can perform in the stock market.
Oh, absolutely. Some people are so bullish on housing for, whatever reason, and that comes from the news and their different networks. Like we have this slide from CNBC with Diana Olick. She is infamous for telling people not to buy real estate before 2020. To your point, that people that are buying out west, you're looking at appreciation of 30%. I mean, where else are you going to get that return year over year?
You let me know, and we don't tell anyone that's watching this.
Yeah, we'll keep it to ourselves.
No, but seriously, like, I get it. I get why people are bullish from a surface level. It's, you've seen prices go up 40% in 2 years. You're like, something's got to give here. But we're seeing it. We're seeing the prices correct. And it's only happening in certain parts of the country. Appreciation is just slowing down in our area. That's still what's going on. Like, we've been talking about price correction and home price depreciation for the last 6 months now.
Right.
But all that's happened in our area is milder appreciation.
Right, because inventory is still so crazy low. The Federal Reserve did what they did, increasing the federal funds rate so much to slow down real estate, because real estate is what sped this economy up so significantly over the last 2 years.
Mm-hmm.
So now they're still trying to correct that, and they're not having a really fun time doing it, because in a lot of markets, appreciation is still occurring.
Well, it's a lot harder for them to do what they want to do with this inventory problem.
Right.
There's just I don't see a way where we get 1.5 million homes come to the market when I don't have this number in front of me because I really wanted to keep this line going, but it's somewhere in the line of like 80% of the country of mortgage holders have a mortgage rate below 5%. And I think 2/3 of the country have a rate locked in under 4%.
It's 66%.
Yeah.
66% of people with a mortgage right now have a 4 handle or less.
Yes.
Now, of course, that number is diluting as the months go by because more and more people are getting higher rates. But that doesn't take away from the fact that everybody refinanced, right? Yeah. Again, if you didn't refinance, like I said earlier, you were living under a rock or you couldn't qualify for whatever reason.
So who's selling their house to bring that inventory to the market?
It's the Cold War that we've talked about on this call before.
Yeah.
It's the same reason why someone wouldn't refi from 3 to 6. Why would you sell from 3 when you're going to go out and buy at 6?
Yeah. So you got guys.
Unless, of course, you need to.
Go ahead.
No, you're good. Sorry.
No, I'm just saying, like, just to get inventory to the market, you've got guys like me trying to knock on people's doors saying, hey, like, do you need to move? Doing whatever we can to get people to the market because there's just not a ton of homes there. So it's really takes a lot of, if you want to buy and you don't like what's on the market, just call me and I have no problem having doors slammed in my face, being hung up on by sellers that don't want to sell. But eventually someone says yes. So I'm out there looking for inventory for you people.
If people are still surprised at downsizing or the move down analyses that we can do for you to show you how much equity you have in your home now, you don't need to move all of that. But if you did, you'd be surprised that your payment's probably going to even be lower with that smaller mortgage on the smaller home.
Yeah, if you need it. It's mostly, it's a lot of the wealth and a lot of the real estate right now is held by baby boomers.
Right.
And actually, recently, baby boomers moved ahead of millennials as the largest buying segment of the population. It was millennials, but now it's boomers again. So we need boomers to get active for the inventory, to help with inventory, and as well as, builder sentiment needs to improve so we get more houses built. There's a lot that needs to happen to bring this inventory up and provide more downward pressure on pricing. We just don't have it in the Midwest.
No, we don't. But it makes sense if you think about it, John, because the millennials that were using the buy up, the move up analysis, that were taking all of their equity from their home and then going to get a jumbo loan with an interest rate of 2.5% and carrying that same payment, It's exactly what the boomers are doing right now in their downsizing tactics. Yes, your interest rate is doubling, but your payment is the same or lower because you're using all the equity that you have earned over the past couple of years and putting it into your new home.
If they even need the interest, even if they
It
even
could be, it could be a cash buy, right?
Yeah, a lot of them are paying cash. And before I get to what you wanted to chat about real quick, I also wanted to provide this chart. I know it's a little blurry, but for people that are still wondering, inventory is just one piece of the pie. It's a huge piece of the pie of why the market's not going to crash in this area right now. But this is another one. This is a chart I was recently, someone shared this with me, a mortgage credit availability index. You can explain this a ton better than me as to what this means. But you can see here, 04, 05, 06, 07, 08, the mortgage credit availability is skyrocketed, right before the crash. What does this mean? Just to explain
let's not overcomplicate it, man. That was when you could sign a piece of paper and get a mortgage. That's all this is alluding to.
Yeah.
And you see that massive raging bull like downslope then becomes 07, 08, where we as a mortgage industry are still so heavily regulated, but it became so extremely stringent what seemed like overnight.
Yeah.
That's why you see that massive decrease. And then, of course, it basically levels out, right?
Yeah, it actually went up a bit in the 16, 17, 18, and then post-COVID or during and post-COVID, we're here again. We're down here at 100.
Yeah, and those 15, 16, 17, that's when interest rates were in what we like to think is kind of like the golden age, right? Like between 4 and 5, between 4 and 6, you call it. That's when the economy hums and when mortgages hum too. Our interest rates were artificially low and now they're artificially high. We're trying to get back to that level.
Yeah, I like that. Yeah, that makes a ton of sense. I mean, this chart right here, if you're wondering, like, why isn't the real estate market crashing? It's one, the inventory problem that we just described, and it's this. Not anyone can just get a mortgage. It's much harder to get a mortgage. And for this reason alone, there's not going to be a ton of foreclosures. We need a bunch of foreclosures to come to the market to bring prices down. Why isn't that happening? This chart tells you exactly why.
Yep.
So this is another thing, guys. Like, you're waiting for the market to crash. If you're still waiting, I get it, but I get what you're trying to do. But there's just economically, mathematically, however you want to describe it, it's not really in the cards right now. So if you need to move, do it. And if you can afford it, I get affordability is very low right now, but we're hopeful that and then in the remaining part of the year, we see rates come down. We have predictions that they might come down to, under 6%, maybe 5.5%, but we don't know. Like, we can't predict this. It's a roller coaster. Hence,
no one knows. No one knows. But what we do know is that, let's say you do buy now a $400K loan and it's a 6.5% interest rate. If you waited to buy when rates, let's say, are 5.5%, that home is going to result in, let's say, I don't know, we'll call it a $450K loan because that home is being bid up on.
Yeah.
So would you rather be in the position of buying with that lower interest rate with the higher price, or already having bought? Meaning now you have that equity that you've built, and then you're becoming the 6.5 borrower that goes into 5.5. You're going to have a lower payment because you financed less up front. Yep. You financed 400, not 450.
That's huge. Yeah.
Forget about the interest rate from the get-go. Think forward.
Absolutely, man. Yeah, and it's absolutely right. Why is that home? I'll hammer this home too. Why is that home going to go from 400 to 450? Well, if rates come from 6.5 to 5.5, that's a huge jump. People are going to go nuts trying to buy houses again.
Right.
Because 5.5 looks really good compared to 6.5 and 7.
Again, all relative, right? That 5.5 is the holy grail all of a sudden.
Yeah. Real quick, I know you shared these with me. You want to touch base on these a little bit before we wrap this up?
Yeah, we handled most of it, John, but what I want to hammer home is that FHFA is different than the Case-Shiller home price index. Case-Shiller, as you know, is just, the average prices of homes sold. That takes into account cash offers. The FHFA is just mortgaged homes. So if you're watching this video, looking to John and I about interest rates and home values, there's a really good chance that you're going to be getting a mortgage to help you buy your home. Look at numbers from the FHFA, not
Unless you're a
Case-Shiller.
boomer.
What's that?
So unless you're a boomer.
That's
you
right.
have a
That's
bunch of
right.
equity. No, I'm sorry. Keep going.
No, but it's exactly right though, man, because the FHFA, you see how those numbers are so much different than Case-Shiller because the boomers and other people that can buy cash, historically speaking, that's when you're getting a pretty damn good deal on your home because you're buying cash and bringing down home values.
Right.
Mix in some foreclosures there too. Like we said, there's really not much of them,
but
that's what Case-Shiller looks at, not FHFA.
Yeah.
So if you're in the market to buy a home and you need a mortgage, focus on numbers that are mortgage related, not cash related.
Yeah, that's a good point. And even cash right now is like my cash buyers are, they're all paying list or more, even if they have cash.
But to that point too, they're paying list because they have cash. They're not bidding up.
Right.
They're going to win on that list with cash over someone that has a $5,000 over with a 3% mortgage down payment.
Oh yeah, 100%. Yeah, historically absolutely correct. You're getting a deal with the cash, and that's coming back too. It's not like 2021. If you had cash, it was like cool. You're still paying over list. Like that's how crazy it was.
Yeah, that didn't matter. It was highest offer wins.
Yeah, it's coming back though. Like you're able to get a better deal now with cash.
Exactly.
And then
this is basically the same thing. Look at the bottom, real appreciation.
So this
is her, man. It's Diana Olick. She is bullish on housing. She's always been bullish on housing. She's been employed by CNBC forever. I mean, she's a good news anchor, but she hates housing.
Okay.
So always just like I'll watch her and just be like, come on, what are you doing?
Yeah.
Look at the bottom, real appreciation up year over year. She is this big headline, prices go negative, everything's red.
Mm-hmm. Yep.
That is just the medium home price with that Case-Shiller index, doesn't take into account the FHFA. And again, it's just month over month. It's not a real indication as to what's going on in the market.
Exactly.
It's a scare tactic.
Yep. It's the first couple of PDFs we shared, Cook County and Will County. The left column is month over month. The right column's year over year.
Year over year.
Look at what's going. I mean, we always like to see what's going on month over month because it can, help us, see trajectories. Year over year is, that's what I like as a homeowner to see what's my house doing year over year.
Right. We've talked about this. This is not a short game. You're not buying real estate as a day trader. Even people that flip homes, it doesn't happen the next day, right? Unless you're buying and selling homes at auction, if you are, good luck. But this is your home, right? It's not just an investment for your portfolio. It's where you live.
Yeah, absolutely. 100%. So long story short, if you just logged on now to watch this 33 minutes in, what we're seeing, I think that last slide, Jimmy, I'll pull that up again. What we saw just here is a perfect encapsulation of what we're trying to educate everyone on. You're seeing this on the news. What's really going on in Cook and Will County, and if you have other counties you're living in, you want us to talk about, drop a comment. We'll review that as well.
Right.
But overall, we're seeing appreciation year over year. Home prices are still going up. And if you need help, if you need more education or more insight on what's going on, how to even buy a house, just reach out to us. All our contact information will be, if you want to go to the YouTube channel, it'll be in the description of the YouTube channel or the YouTube video. And then I'll drop comments on the Facebook Live with our contact information as well. So just reach out to us. We're always happy to answer any questions.
Yeah, let us help you. We're lucky to live in Chicagoland.
Yeah.
Everything that John said, the reason that we're still appreciating, but what comes with that is the fact that we are still seeing multi-bids on homes. So you need a fantastic team to stand apart from every other offer if there's 5 other ones. You're not always a cash buyer. So how do you set yourself aside and be the one that wins that bid? You need a damn good team.
It's that fresh water, man. Lake Michigan.
That's right.
It's keeping us in the green. We're going to drink it dry and then we'll move on.
There you go, man.
We'll move. All right, brother. I appreciate you and all your wisdom and insights.
Always, man. You too.
Clients, you help us get into homes, and let's do this again in a month and see where we're at.
Let's do it, John. Thanks as always, man. Great insight.
All right, everybody. Thank you so much for watching. as I said, reach out to us if you have any questions, and we'll see you next month.
See you guys.